Hello and welcome to the CEO Masterclass. I'm Peter Switzer, and today we're talking to the CEO of Powerwrap, Will Davidson. This company recently listed. Let's just check out what it does and what's its future. So Will, thanks for joining us on the CEO Masterclass.
Thanks for having me, Peter.
All right, so why don't you tell us about Powerwrap?
Sure. Powerwrap is an investment wrap platform where it's used by brokers, planners and advisors. It's used to administer their clients' investment portfolios. We currently have about 8 billion under management, and as opposed to the bank-aligned platforms, we're independent and we have no vertically aligned product.
So how many rivals do you have out there in the marketplace?
There are a number of different platforms out there as wraps, but they're primarily retail wrap platforms. So I'd say there'd be 5 or 6, and then there are the bank-owned and controlled platforms internally.
So what's so different about Powerwrap?
Powerwrap is very different because we are the only platform that focuses on sophisticated investors. So wholesale investors who tend to be $1 million plus. So the types of clients that we have a very different demand for investment product. And as a result of that, our average portfolio size is about $1.5 million versus those other retail wrap platforms. Their average client size is about 200,000 to 300,000 and primarily just investing in super.
Okay. Now, you've identified the fact that you attract a different sort of client. What is it that they would want on this wrap that you have the specialist skills to make it a good experience?
Absolutely. So mostly it's to do with alternative assets. So we call them wholesale managed funds, and in that asset class, we have 350 of those wholesale managed funds, and it's $1 billion out of that $8 billion that we manage. So in that type, they're hedge funds, they're mezzanine debt funds, they're private equity, they're infrastructure funds, and you can't get those on any other platform other than Powerwrap. So we have a very specialist skill base of managing and administering those types of assets for high net worth investors.
Yeah, so you're saying it's less restrictive, where other platforms might say this is the group of companies you can invest in or products. You give them more, you might call exotic or alternative type investments.
Yes, so it's called an open architecture approved product list.
I knew there'd be a word like that. I was searching for that, yeah.
So over the 5-6 years that we have had high net worth advisors using our platform, they come and they request to put the product on. So it's an advisor driven APL as opposed to a bank where they have a vertically aligned APL.
Okay, so here's a question I've got, and the relevance of the question is going to be interesting. How is Powerwrap faring in a current low yield environment?
So for us, it's an interesting time. As people have looked for low interest rates and then low returns in the ASX, they're having to go towards the alternative asset classes for the higher returns.
Yeah.
And so the hedge funds that I mentioned, for example, are a good example. So they can go long and short, and they can go in all sorts of different asset classes as well as infrastructure assets. So people are looking towards that asset class to get the yield that they can't get from the Aussie equity market.
Yeah, so as people go up the risk curve, as they say, you're going to be there offering more alternatives.
Yes.
For example, people love a 5% term deposit, can't get that anymore, but there are various funds that offer yield, albeit they're not as safe as term deposits, but they're out there, and you're saying that your platform will actually offer those sorts of alternative products.
But some people even say they're lower risk, so infrastructure funds are not accessible other than through this sophisticated investor product. Hedge funds, it sounds like they're riskier, but actually their ability to short in a down market can reduce risk. So in that situation, people look to these funds. The Future Fund is a great example of use of alternative assets in a low yield environment.
Have you got the Future Fund on the wrap?
We don't. It's not available as a product, but we will speak to Peter Costello and ask.
It would be good. I think a lot of people would love to invest in it. All right, so what has been the impact of the Royal Commission on the business?
Yeah, it's a strong tailwind for our industry and our segment. Obviously, the banks have had vertically aligned product, and essentially the Royal Commission was calling that out. So they did previously employ about 10,000 advisors within the main 6 banks and AMP IOOF.
Yeah.
That's dropped down to 8,000 advisors. And that's steadily reducing the number of advisors who are employed by those big institutions. So for us, that tailwind means that those advisors, as they leave, they need to plug into an independent platform like us to get those services. So it's a strong tailwind, but in addition to the fact that the Royal Commission has meant the advisors are leaving, the banks have also looked at how they're going to deliver advice. And they themselves have chosen to move out of personal advice and move much more towards a salaried advisor model. Again, very positive for Powerwrap as those other advisors need to plug into our platform.
Okay, so how do you actually attract advisors? Because that's going to be critically important to getting more and more money into the platform. Yes. And that's the way you make your money, isn't it?
It is, yes. So the advisors, we have two key elements to how we attract. One is it's a full turnkey solution for what they need. So beyond just the platform and the administration of the portfolios, we actually have a full turnkey solution that allows them to walk out of their previous institution and start up a business the next week. So that includes an AFSL, that includes full compliance, legal, financial, platform and clearing and execution services. So they can take their business model and plug into us straight away. In addition to that, we've built an incubator. So we recognised that there were additional barriers, and one of those were premises and doing the fit out. So we've built effectively a WeWork for wealth managers, and it's called Ticker. So it's there available so that they can have that ability to bring their clients into a high-end wealth management practice, but they still own 100% of their business. So they've got the best of both worlds.
Okay, so you're listed now. Has that brought an interesting experience? Because listing doesn't, give you great experiences. Sometimes it's tough because the public can look at you and make assessments that sometimes you think are far way out there.
Yes.
So what's the experience been like?
It's been positive. So we listed in May, well oversubscribed. We raised the money that we were looking for, obviously. So we have $20 million in the bank. Our market cap is only 50 mil, so the market is only valuing our business at 30, so well under the rest of the market, given that we have $17 million of revenue. So it's only valuing at less than 2 times versus our comparables are over 10 times on those numbers. So there's a lot of room and a lot of opportunity in our stock. Okay,
so results so far?
Yeah, so we just published our first year end for FY19. So pleasingly, we were comparing to the prospectus and we over-delivered on the FUA number. So the funds under administration, we told the market we'd be at 7.5 billion and we delivered 8.1, so well above. And revenue, for example, we said we would deliver just over 15 and we delivered 17. So we've delivered 18% growth in the FUA line and converting that into 20% growth in the revenue line. And we also overachieved on the bottom line number by $1 million. So they've been positive results. So now it's about getting the message out there.
So if you had a chance to put all those annoying analysts who aren't seeing what you're seeing, if you could get them into one room and you could convince them to see what you're seeing, what would you say to them?
It's the opportunity. So we've proven the growth trajectory, and it's really the fact that 85% of our industry and our segment was controlled by those banks, and that 85% is moving to the independents. So those natural tailwinds will deliver a business to Powerwrap and to my other independent competitors that will take the lion's share of that market.
Okay, so what's the next thing for Powerwrap?
So we'll continue to focus on those alternative assets that we mentioned, and in this situation we'll go further in securing alternative assets that we will get exclusive rights to, and particularly by looking overseas to find the best managers in the US. And because we're a tech platform, we're continually developing our technology interface, and in that interface we're rolling out new tech at the end of this year that will have a full managed fund order pad. So taking the friction out of ordering reporting and trading on wholesale and retail managed funds.
Okay, well, good luck.
Great, thanks Peter.
That's Will Davidson, the CEO of Powerwrap.